I've noticed a few times in our discussion you've used the word compounder. How would you describe what a compounding business is for you? What are you looking for?
I think we try to keep it simple. I do think people overthink this process and stock picking. And I always say that all you really need to know about a business is a dominant position in a growing market. If you have those two things, that's kind of all you need. If you think of yourself personally, I have no idea what's in your own portfolio, but I would imagine if you have a successful business that you've owned for many, many years, I would think if you thought about the market they're in, it's probably an attractive market that has good growth characteristics. And two, that company is very strongly positioned within that market. And of course, it isn't just that simple. You need to, it implies barriers to entry. It implies that moat. It implies, maybe proprietary products or patents or good management. And you need to check all those boxes. It isn't just, sort of that simple. But if you think of what we're looking for in terms of those compounders, it's that sort of dominant position in a growing market. And, on the flip side, on the short side, where companies are losing a dominant position. If you think of, Intel or something like that, it's not a stock we would really look at, but there was a day, Intel had a dominant position in CPUs and they were selling into PCs, which was a growth market. Well, there was a time where, PCs weren't such a growth market anymore, and Intel was no longer such a dominant company either. And so, that might have been something that would get you going on the short side on Intel if you sort of saw that developing within their market. Again, and people think, well, small cap companies, how do you have a dominant position? These are small companies. Well, we find, niche companies that have, real IP, real leading shares, oftentimes 50, 60, 70, 80% market share in what they do. It's just an incredibly small niche, which in our assessment would be a growth area as well. Where we can find companies like that. So those are the types of compounders that we're trying to find. And like I say, you have to be vigilant. You have to make sure that market is still healthy and growing, and that the business that they're going to continue to execute within that market and maintain or even hopefully grow their market share.
Do you find that the types of franchises or moats that you were looking for have shifted over time? For example, a lot of investors follow Warren Buffett, and he obviously popularized the idea of moats and talked about a lot of companies that had these great enduring moats. For example, consumer goods companies that were able to get a very strong brand position, and then because once they get that position in a supermarket, it's very hard for another consumer good product to take that position off them. Are those sorts of moats still around, or are moats now shifting more towards technology and other areas that give companies a sustainable competitive advantage?
Yeah, it's a tough question whether moats are easier or harder than they used to be. I agree with the premise of your question and looking at something like consumer branded products. I think those moats have eroded a lot. I think consumers are willing to try other products and they might not even go to the grocery store or look at what's at the end cap of the grocery store shelf anymore. So that doesn't buy you anything. But we see a lot of companies that, especially it's quite often in Asia where they've maybe they had a legacy business where they did, textiles, or maybe they had a legacy business where they were in, rubber or something, some commodity product. But because they're in Japan or because they're in Taiwan, well, they could no longer compete, making commodity rubber. So they found new applications for their rubber. Maybe it was, it was in, the medical field, or maybe it was in, EV batteries or things like that, where a lot of you've seen a lot of electrical, like, you're talking about technology, where suddenly they've kind of grown these businesses, and they had this traditional business that sort of melted into the background, and they've gone to these sort of higher end niche components born out of the chemistry they were doing 50 years ago, where, now they have very, very high market share for real specialty niche, compounds that might be a component of an EV battery, or it might be a copper foil that's sitting inside a iPhone or something like that, and they have, literally dominant share. And just because of, what they were, and so the moats are still really strong because they have relationships. And then again, that initial chemistry was done 40, 50 years ago, and it's just evolved over time. And it's kind of in the woodwork of these businesses. It's kind of in the walls. And you couldn't just sort of snap your fingers and throw a lot of money at it and say, oh, let's, and you might not be that interested in it anyway, because it might be a market that has a total size of a few $100 million or something like that. It wouldn't justify the investment, at least not yet. So, we find a lot of those, we have a lot of fun with those types of businesses, and they are quite common in Japan. They're quite common in Taiwan and Korea, where you see they've kind of evolved into something that's becoming very high end. Another business, I don't want to get into too many examples, but there was a company called Eclat Textile in Taiwan, which we don't own today, but it was a company. It was a textile business. And, that textiles got hollowed out by China and Vietnam and, places like that. So they came up with higher value. I mean, I don't know if you have Lululemon in Australia, but there's sort of this athleisure wear trend. It's been around for a long time. I know my wife likes it and spends too much money there. But when you looked at it, Eclat Textile, what they had this product called Nylon 66, which was a key raw material, which was being sold to Lululemon. And we did the work. There are only 3 companies in the world that can make this. And here's, we look at a Lululemon at Apis Capital and we say, like, that just goes in the too hard pile. It's a good business for sure. It's quite expensive. A lot of smart people looking at it. We just, smart people think it's a long, smart people that think it's a short. Here's a supplier who, 15% of their sales are to Lululemon, but it's also, 15, 20% to Nike and Under Armour and Athleta. And this trend of athleisure wear, that's what we kind of bought into. That was the growth market. But so they had a dominant position. They had more than 50% share for this key raw material that everybody who wanted to make athleisure wear, this sportswear, had to go to Eclat Textile. And here it's 10 times earnings. It has a 6% yield. It's growing 30%. It's supplying everybody. And that's what we do at Apis, is just sort of, okay, I see this trend and I like, I believe in Lululemon as a business maybe. But is there a better way to play it in Taiwan? And so that was a case where we said, I can get the same growth. And again, in that particular situation, the people in Taiwan had never heard of Lululemon, so it's a small cap company. They didn't understand sort of maybe what the potential was there. And so that's kind of what we're doing all the time, is looking for these niche companies that have reinvented, that's one of the things we do, I guess, where they kind of took an old textile business that was, very, mundane for many, many years, but they went higher and higher value add to create products that people like Lululemon wanted to buy, and they had a great growth that came from that. So it's those kind of things that we see a lot of.
So the moats are still there, but they require a little bit of extra digging maybe to find.
Yeah, sure. I mean, again, very common for us to kind of look at. I think Apple is an interesting company, or I think Tesla is an interesting company, but we're looking at the supply chain for those companies. It's all those sort of small companies that are maybe have a good, I don't know, lens material for the camera that's on the phone, or some kind of, particular, multi-layer ceramic capacitor, which is being used in the next generation of iPhone, and then maybe that little Japanese company has won the entire share of that. So it's those kind of things that again, these little niches that you could find, usually cheap companies, that might not be appreciated for what it is, and they have really good growth prospects because of what we sense is the supply chain and the product, I guess, life cycle of some of the new products maybe that Apple's coming out with, or Tesla, or what have you.
Do you find that these sorts of companies, do you find them more frequently in certain industry sectors?
Yeah, for sure. I mean, when you look at what we do and don't do within global investing, we're really not interested in things that are local. So if you need, if you think of industries like property stocks in Tokyo or Hong Kong, or a construction business, or a business that's like a utility, or where you've got, you got to know the politicians and you got to know the regulators. We avoid that. We don't know anything about Japanese property, and you should, if you want to invest in Japan and have somebody who's a Japan expert, they should be on the ground in Japan. That's their edge. They would have that advantage. But sectors like technology is clearly, a sector where a global perspective is required. Healthcare is another area where we see a lot of situations where a global perspective is really helpful. Consumer names like Eclat Textile, for example, is another area where, global companies competing on a global basis. And then industrial and materials, commodity type businesses or industrial type businesses. To me, any business that sells to another business is sort of an industrial business. And so, again, those are definitely fair game. So there's those sectors that lend themselves to a global approach. And then I would also say there's those geographies that lend themselves to a global approach. You don't really find us in frontier markets. We're not, again, I think if you're going to buy a stock in Africa, you probably got to get the country factor is the dominant factor, right? If you can't really pick stocks in Egypt. I think you're either going to get Egypt right or wrong. But there are countries that are very global. Korea is clearly export orientated. It's perfect for what we do. Taiwan is perfect for what we do. Japan is perfect for what we do. Companies and I should say countries which have deeper markets, a lot of export orientated companies. If you look at in India, it might be IT services, or again, it could be healthcare. There's also a lot of good industrial exporting companies within India as well. But generally, it's North America, it's Europe, it's Japan. Those are the big areas. But where you find us in emerging markets, it's not not going to be the Africas. It's not really the Latin. Again, never say never. We're free to go wherever we want. That's all part of the strategy. But Latin America, again, Russia, Eastern Europe doesn't feature terribly high in our list. So there are countries that lend themselves to that global approach, I would say, and also sectors that we gravitate towards.
Podcast is for informational purposes only. It does not constitute financial advice or take into account the particular investment objectives, financial situations, or needs of individual listeners. Listeners should consider whether any opinions or recommendations in this podcast are suitable for their particular circumstances and, if appropriate, seek professional advice, including tax advice.